You're at your kitchen table, coffee is going cold. You open your phone, the headline hits. Trump administration pushing crypto and private equity into 401k retirement accounts. Your first thought, wait, Bitcoin in my retirement fund? Your second thought, should I? Here's what most people don't realize. Your 401k isn't just an investment account. It's probably the biggest pile of money you'll ever build. The difference between retiring at 65 or bagging groceries at 74. So when someone says, we're adding new options, you need to know what's really on that plate. But here's what's strange. Everyone's debating crypto. Everyone's debating private equity. Almost nobody is talking about why this is happening right now. And when you see the real reason, it changes everything. So here's what we're going to do. In the next 6 minutes, I'm going to break down exactly what's happening, what private equity actually is, what crypto in your 401k really means, and the hidden incentive behind this whole push that nobody wants to talk about. Then, I'll give you a simple 4-question framework. Answer these honestly, and you'll know, with confidence, whether this move makes sense for your retirement, or whether it's a trap dressed up as opportunity. No fluff, no hype, just clarity. Whether you've got $10,000 saved or $500,000, stick with me. This could be the most important retirement decision you make this decade.
Let me explain private equity like I'd explain it at a barbecue. You know how you can buy Apple stock on your phone in 2 seconds? That's public equity. Price visible. Sell anytime. Private equity? Opposite. It's like buying a share of your neighbor's restaurant. No stock ticker, no daily price. You hand over cash, and you might not see it for 7 to 10 years. Fund managers take your money, buy entire companies, try to make them valuable, eventually sell. Hopefully, at a profit. Now here's where it gets interesting. Private equity has delivered strong returns historically, 10 to 15% annualized in good funds. But there's a catch most people miss. The gap between the best funds and the worst funds? Massive. With index funds, you basically get the same result. Pick any S&P 500 fund, similar outcome. Private equity? Pick wrong, and you could lose half your money while someone else doubles theirs. So here's the question that should keep you up at night. The private equity funds in your 401k, will they be the good ones or the leftovers nobody else wanted? Guess who usually gets first dibs on the best funds? Hint, not the person with $47,000 saved. Keep that in mind. We're coming back to it. Now, the elephant in the room, crypto. I'm not here to say Bitcoin is a scam. I'm not saying it's digital gold either. But here's what I need you to understand. Crypto is volatile in a way most people don't feel until they live through it. Picture this. Your 401k is a house you're building, brick by brick. Every paycheck adds another brick. Slow, steady. Now imagine one brick can double in size overnight, or shrink to a pebble by Tuesday. That's crypto. Bitcoin dropped 65% in 2022, surged 150% in 2023, up huge again now. In a trading account? Fine, you signed up for the ride. But in the account your entire retirement depends on? Different conversation. Now here's where this gets really interesting. There's a specific reason the financial industry wants these products in your 401k, and it has almost nothing to do with helping you retire rich.
Follow the money. Always follow the money. Right now, $11 trillion sits in American 401k accounts. $11 trillion. Most of it parked in low-fee index funds. Vanguard, Fidelity, Schwab, charging 0.03% to 0.15% per year. The industry makes almost nothing. But private equity, crypto funds, fees jump to 1 to 2% annually, sometimes more. Now do the math. If just 10% of that $11 trillion shifts to higher fee products, that's over $1 trillion generating 10 to 20 times more revenue. That's not pocket change. That's an ocean of money. That's why there's a massive lobbying push. I'm not saying these products are automatically bad. I'm saying understand why someone's offering you something before you take it. When the waiter keeps pushing the most expensive wine, maybe it's delicious. Or maybe it's the bottle with the highest margin. All right, enough background. Let's get practical. Remember that framework I promised you? Here it is. Should you put crypto or private equity in your 401k? 4 questions. Answer honestly. 1. How old are you? 25 with 35 years until retirement? A small, high-risk allocation is defensible. Maybe 5%. Maybe 10% if you've got the stomach. 55? Be very careful. A 65% crash could wreck you. You don't have time to recover. 2. Do you understand what you're buying? Can you explain private equity to a 12-year-old? Do you know what Bitcoin's halving cycle is? If not, don't put your retirement in it. Full stop. 3. What fees are you paying? This is the silent killer. 1.5% versus 0.05% doesn't sound like much, but over 30 years on $500,000? That difference eats $300,000 in returns. That's not a rounding error. That's a house. 4. Do you already have access outside your 401k? Here's what most people miss. You can already buy Bitcoin in a brokerage account. You can already invest in publicly traded private equity firms. The 401k gives you tax advantages. Yes, but it also locks your money up and limits control. Now here's what I said at the start. This isn't really about crypto. It's not about private equity. It's about a fundamental shift in who carries the risk for your retirement. 50 years ago, your company gave you a pension. They managed everything. You just showed up. Then came the 401k. Suddenly, you're the fund manager. Now, they want to add even more complex products to your plate. Products that professional investors with entire analyst teams sometimes get wrong. That's not democratization. That's delegation.
They're handing you a scalpel and saying, good luck with the surgery. So here's my takeaway. More options aren't automatically better. Access isn't the same as advantage. The best retirement strategy? Almost certainly the most boring one. Consistent contributions, low-cost index funds, diversification. Could crypto moon? Sure. Could private equity crush it? Absolutely. But your retirement isn't the place to chase moonshots. Your retirement is the place to build a house, brick by boring brick. If this made you think twice, even for a second, hit that like button. And if you want to learn how to actually build a retirement portfolio without the hype, watch this next. I'll see you there.